Please be advised that this recorded webinar has been edited from its original format, which may have included a product demo. To set up a live demo or to request more information, please complete the form to the right. Or if you are currently not on CSC Global, there is a link to the website in the description of this video. Thank you.
Hello, everyone, and welcome to today's webinar, 2021 Forecast. What did we learn from 2020? My name is Annie Triboletti, and I will be your moderator. Joining us today are Kevin Kinderman and Pete Razia. Kevin is the Market Director for CSC's Real Estate Division, where he defines product positioning and marketing strategy to maximize revenue and strategic growth. Under Kevin's leadership, the CSC Electronic Recording Network has grown exponentially, securing CSC's presence as the market leader. Pete is the Director for CSC's Real Estate Division based out of Wilmington, Delaware. His primary focus is business development and strategic growth of the electronic document recording program. He brings his vast experience in sales and leadership to this team, and under Pete's guidance, the business has experienced record-setting growth. And with that, let's welcome Kevin and Pete.
Thanks, Annie.
Great. Thanks, Annie. All right. Thanks so much, everyone. Good afternoon for those on the East Coast. Good morning for those on the West. Welcome and thank you for taking the time to join our webinar today. As Annie mentioned, my name is Pete Razia. I'm one of the sales directors here with CSC. I've been with CSC for almost 14 years and was with Bank of America's Mortgage Lending Department for 5 years prior. A little bit about CSC. We're the trusted provider of choice for 90% of the Fortune 500 companies. We're headquartered out of Wilmington, Delaware, and do have offices worldwide. We work with over 10,000 law firms and are ranked by the New York Law Journal as one of the top providers for legal services. We support 180,000 entities, all the way up to the Fortune 500, and all the way down to new businesses that are getting set up every single day. Our digital brand services support 7 of the top 10 global brands. We work with over 3,000 financial institutions. Bottom line, we have a very vast customer base, and we do it all. The second slide we're going to show you today is our robust menu of service offerings that we have. Some of you on the call today are already using us for 1 or 2 of these services and are taking advantage of CSC to handle many of your compliance filings. What you're seeing is a comprehensive list of our products, with real estate just being one portion of what we do. Bottom line is, we offer so much more than other service providers that are out there. In terms of a quick overview of today's presentation, we're going to be talking a lot about the real estate industry and how it's evolving. We're going to give you some examples and statistics related to real estate. But throughout today, we're also going to discuss how CSC fits in and how we can service you and help you and keep up at the rapid pace that the market is demanding. Again, we do so much more. Real estate agent services, entity management compliance, digital brand services, in addition to real estate recording and searching. That being said, I'm going to turn it over to Kevin, and he's going to talk a little bit about our agenda.
Yeah, thanks, Pete. Great summary. Great to see all the things that CSC does. As Pete and I present to you today, some of the things we'll talk about include the real shift that we've seen in our real estate industries this year, specifically in mortgage lending, but also in some of the real estate industries, perhaps title and settlement services, or even in the mortgage servicing world, sort of on the post-end piece of the mortgage origination process. We're going to talk about the growth that we've seen and how significant it was this year. Some of the details about how various groups or parties to the real estate transaction had to pivot in 2020. I'm going to do a little bit of a follow-up on county recording times and some recent state updates. Over the last few webinars that Pete and I have done, we've reported on some of the average recording times that the counties have had while we've gone through this pandemic. So excited to share some of those details. Talk about the shifts that certain states have made to assist the real estate and mortgage lending industries in adopting technology. We'll discuss toward the end some of the trends that we see and what we sort of expect to see throughout 2021. And we'll also go a bit more in depth to some of the technology and advancements that CSC is offering to support so many of our clients. So the year has wrapped up, and we get to look back now and see all the great changes that occurred. And one of the things that we looked at, some of the initial information came from the National Association of Realtors, and there were three popular sources, that home buyers had used in searching for a home. And, traditionally, we had, made plans on Sunday afternoons to cram every single house, into our schedule. And if we were lucky, and when we searched for a home, it'd be 5 or 6 homes that we could see or review within a day. The interesting point here is through online and direct websites, 93% of home buyers used that sort of avenue to search for homes. This was the number one source that home buyers went to, and it's really just quite a shift from what it may have been in years past. Using a real estate agent or working through the agent to see the homes was number two, 86%. So not a significant change there, just that it's still one of the dominant ways that happens. But impressive enough too, a tablet or an app was 73% of what home buyers used as their source to search for homes. So interesting information just to see that a shift's happening on the consumer side of it. And we know that often that's the piece that sort of drives many of our organizations and the decisions that we make and the services that we offer. It's to respond to the consumers and how things begin. A couple other stats we wanted to share here is just that 50% of borrowers, they actually had chose their lender based on whether or not the lender offered online, like an online application or a portal. And it was neat that even 47% of them responded specifically saying they wanted the ability to upload documents electronically, and that was a factor in the decision that they had used to the lender. And I thought, wow, that's interesting. We're sort of seeking and really looking for the use of technology through the application process. Two last points. One stat here is 48% of the lenders, they reported a significant effort went into and resources were given to enhance both the front and the back end processes for their organization's progress, right, or evolution in supporting a digital lending experience. So that could be on the complete front end of the sales generation and mortgage application process, but back end process could even go to a mortgage servicing application, right? And how, users and organizations begin to utilize more technology that way as well. And then finally, here in 2020's Voice of the Title Agent Special Report, respondents to this survey actually acknowledged that there were significant opportunities for them to sort of revamp or renew their entire sales and marketing approaches, and that through using new technology, they thought that was one of the places that they'd be able to reduce some of the largest operational, right, or organizational costs that they'd had. So interesting information just to see that there's a pressure in all places to go digital, but in most cases, it all goes back to the consumer, and that's ultimately where we make our decisions from. So interesting information. I'm gonna transition here over to Pete and have Pete talk to us a bit about the growth that we saw in 2020.
Yeah, absolutely. So can you say growth? Look, simply put, everybody, there was a boom. Mortgage lending had a boom. Our recording business had a boom. And just about everything in real estate as a whole had a boom. And that was occurring actually pre-pandemic from the beginning of the year. So analysts are predicting the origination volume exceeded the prior record of $3.5 trillion. And it depends who you're reading. Some analysts are saying that number is $3.2 trillion. Other analysts are saying that number is as high as $3.8 trillion. And the bottom line here is that when your sources are fighting over a $500 billion swing, that is pretty darn rich. And at the end of the day, whether it's 3.2 trillion, 3.8 trillion, and we settle on the analyst that predicts 3.5 trillion, that is a tremendous amount of growth for the mortgage lending, for that mortgage lending number. Also note, the market saw rates that were at historic lows. So rates under 3% was behind over $2 trillion in outstanding refinances that made up 65% of all originations. So the refinances went way up this year or last year. Also note, the market saw our traditional walk-in lenders get a little overwhelmed with some of the volume, and this allowed alternative lenders to step up, and they were able to grow for maximizing from the massive amount of opportunities that were out there. Another tidbit, new loans overwhelmed the forbearance demand. Now that may shift later on down the road, but as of 2020, there were more new loans than forbearances last year. In fact, as of last week, the MBA reported that there are still 2.7 million borrowers in some form of forbearance today, but that number has remained stable and unchanged in nearly 3 months. So the good message here is that that forbearance number isn't getting any worse for now. Lastly, while refis were up, the purchase demand was also up. So we'll talk a little bit more about what the purchase market is going to do this year and next year a little bit later. But for now, I'm going to transition it back over to Kevin to talk about a new way of doing business.
Great. Thanks, Pete. There were quite a few changes many of us had to make in the past year. We thought we'd discuss some of those changes and just how, the events that we faced were unprecedented, right? Everyone had to adapt regardless of the position you'd been in. And certainly there were some that were early adopters, right, to technology. They were on the forefront of it. They may have had a easier time making a transition and using those remote or digital resources. But for any who hadn't, it was impressive. From our view, we get to see the adoption of electronic recording services specifically. And it was fascinating to see just how many law firms and title companies and financial institutions or credit unions hadn't implemented the process yet. And even more impressive, how quick they were able to and how it became such a valuable resource for them to carry on and conduct business. We saw many county offices, and were really, regardless of their size, whether it was a large populated county or small, the use of the technology was relatively easy to implement. Again, not related to the size of the county, and it was great to see. I think Pete will talk about this actually in a few slides, but just how many counties had even implemented the process that hadn't in the past. And my final comment here is, while this was a very challenging and unfortunate year for many of us personally, professionally, we have felt very grateful and fortunate that the real estate market has actually been a place that has really helped the economy as a whole. It's been a driver to our rebound, and it's been I guess the adoption of the technology we've seen in the real estate industries, it's actually served, there's been some silver lining in such a challenging year. It's served us in ways that we didn't initially expect. We now have this technology in place, and it's like this gift that keeps giving, where we have a business continuity plan in place, and we hadn't had that in the past. And now, should anything happen again where we work from home or offices are closed or whatever the case is, we have an actual business process that can keep our business continually operating. And I think everyone can sort of witness that these are good changes that have happened to our organizations, and we're glad that the changes have stuck. I'd mentioned this earlier. We have reported on the average recording times that we've seen over the past year as counties have made this adjustment. And we wanted to do a follow-up report on this. In past webinars in 2020, we had reported on pre-COVID recording times, and we had grouped all counties into their state. Okay, so there's obviously going to be certain counties where they're outliers, but we took the average of the state, of any of the counties that were participating in e-recording, and we said, let's compare their recording times in January and February to March and April and see how they handled, the most challenging months. And then, now let's compare it. Let's compare it to the second half of 2020, and let's see, what happened. And what's interesting here is in states like Arizona, California, Illinois, Texas, even New York, their average recording time was about on par with what it was in January and February. So January and February, for example, Arizona was 24 hours was the turn time from a document being submitted to a document being recorded, again, an electronic submission. In March and April, the challenging months, Arizona, their average turn time was 25 hours. So pretty level, but as we looked at the second half of 2020, when they've been able to really optimize the new processes, the technology that they implemented, commit to the processes, and then get greater adoption from document submitters, their average recording time went down from 24 hours to 4 hours. They accelerated their recording time by a multiple of 6. It's phenomenal, first of all, that they were able to keep the same standard in place during those trying months of March and April, but amazing that they were able to improve their speed, performance, and really become even more productive and quicker turn times. California, for example, they had improved twice the speed. They went down to 4 hours was the average, where they were at 8 hours during March and April. And then some others here, the state of New York, that deserves a call out because New York is quite a dynamic state in some more rural counties, but also heavily populated counties. And they were, again, the same. 31 hours was their average between January and February, 32 hours, about a day and a half, in March and April. So they kept it up, but over the last 6 months of 2020, they cut that down to 10 hours was the average recording time of document submission. So the summary here for us is we're extremely appreciative. We're amazed the counties were able to do so well. And when we even look back at those times, there were many of the underwriting agency reps, right, that would jump in and assist and get statuses as to what counties were live and which ones weren't, and encouraging to adopt e-recording. There were even the industry associations where they had talked about best practices and e-recording being one of them. It was great to see the industries come together as a whole to move things along and keep all of us coordinated. And just an impressive time to look back on and be grateful for the agility that we really had at that time. So with that, Pete, talking about county activations and which ones adopted the new process, go through, tell us which ones were new this year.
Sure. Our county activation teams were working around the clock really since March. I mean, they were busy bees for all of 2020, and we're continuing to stay busy through 2021. Our e-record solution for counties is what's going to eliminate paper from the e-recording process, and it automates the receipt, endorsement, and fee payment in return of these electronic documents. So we were able to help the counties in a lot of different ways. E-recording offices were able to limit their resources and use their personnel more efficiently as they were out of the office. E-recording also reduces the number of rejections, which makes things more efficient. We're able to reduce the need for document scanning, mailing, and so the counties can process the documents from multiple workstations in addition to if they're working outside of the office, if they're working from home. And they can also work at any time of day. And lastly, we're able to reduce overall operating costs for the counties as well. So it was great to be able to support and help the counties through this time of huge transition. So last year we added over 150 new counties that are now accepting electronic documents with CSC. Alameda County in California is the largest at 1.6 million in population, but as you can see, Jefferson County, Delaware County, Utah County, all over 500,000 in population. And really we were taking on new counties across the nation. It wasn't just the large states, it was really everyone. So our county coverage grows every single year, every single month. We currently service 82% of the U.S. population, and that number continues to get bigger and bigger as our e-recording counties are here to stay. I mean, they're using the technology and they're adapting to it, and it's not it's not changing downward. We're adding more and more counties all the time to our network. So all good stuff. And with that, I will turn it back over to Kevin.
All right, great. So this is one of the areas where we saw additional change. There seemed to be a blitz happening all at once with the number of states that were either putting in some emergency orders to provide emergency authorization for notaries to perform that act electronically or through some online resources. But as of today, I think there's 29 states that have permanent legislation in place. This was another big movement throughout the year as we began to adopt technology, and we saw a need for, hey, we got to be able to sign these documents, or we need a notary to acknowledge this. We were able to utilize technology and say, here, we can do this electronically. And there's still a couple states, we'll actually show a map here in a moment, but we've essentially adopted what I would say is a pretty comprehensive process. There's a great deal of security and verification and sort of authentic measures put in place through this technology, which is remote online notarization, that has been quite impressive, and it's been great to see still all the various parties involved, from the GSEs saying, hey, here are our guidelines, this is where we'll accept or we'll participate in a loan that's been completed through a remote online notary. The title underwriters have taken positions, in certain states where they've become comfortable and familiar with state law that supports this. And even counties, we'll talk a little bit about this again in a few slides, but there had even been sort of a transition for counties to sort of feel comfortable with this and say, hey, I'm the gatekeeper and recorder of these records. I want to make sure that they're legitimate. So there was some shift that needed to happen even from the recording offices as we all got comfortable with online notary tools. You'll see here, there's the 29 states that have permanent legislation in place. 19 have some form of emergency authorization to do that, a form of remote online notary or electronic notarization. There's still the two remaining, but we think that as a federal act is passed, that there will be greater consistency and standardization across the board, allowing all states really to jump in. Alta, we've received permission from them to display this slide. They've put together this slide. It's really a fantastic summary of the different types of remote online notarization or electronic notarization, and even the terminologies that are used. In fact, it even goes so far as to say what makes it unique, the type of notarization, what makes it unique as we look at the technology aspects of it. There are processes where multi-factor authentication is used, KBA or knowledge-based authentication processes are used to essentially verify and ensure this is a credible transaction person, and that it's through the use of technology where it's tamper evident and it's a safe and secure way of carrying out the Notary Act. So we'll have these slides available for anyone who wants a copy of them, but this is really a great slide that just talks about the particulars of RON. We've heard these acronyms throughout the year. PRON, which is paper remote online notarization, RIN, and then TWIN and IPEN, IPEN the last being in-person electronic notarization. So again, feel free to review that after the webinar. We can post these slides available for everyone. And then here's just a little more detail about some of the state challenges and additional solutions we've put in place. We've talked about the permanent laws and emergency authorizations. But then we've also addressed, we've heard it referenced as a three-legged stool. Even if it's legal, where a state bill's been passed and it's in effect, you still have to have the other parties feel comfortable and sort of approve of transactions happening through these electronic means, through the use of this technology, and that three-legged stool being county recording offices, the title underwriter, GSE acceptance, again, through the guidelines that they may have posted or published. And then ultimately, these solutions have been put in place because of the challenges that we faced. And again, just impressive just to see all the different ways we've implemented electronic signing, remote online notarization, electronic recording to really transform, if it hadn't been already, but to further progress the real estate transaction into it being something that can happen in a fully digital way. So we've had quite a slingshot effect in being able to adopt this technology and make it happen. So exciting to see those advancements. Pete, you're on this next one to talk us through some of these trends.
Sure, I'll take it. So we are looking at two charts here that look very similar. So what are Fannie and the Mortgage Bankers Association forecasting? And as the charts look very similar, there's some data behind it. There's a little wrinkle here that looks a little bit, that makes it a little bit different, but the outcomes are still similar. But I think it's relevant for this audience to understand the piece of data that's a little bit different. So Fannie Mae predicts average rates for the 30-year fixed loan to remain at around 2.8 and at 2.9 and under 3% all the way through 2022. Okay, so Fannie Mae is predicting rates will stay low. Now the projection for origination volume for this year is at 2.7 trillion, and next year it is at 2.5 trillion. In addition to lower rates, they are also predicting that home sales are going to increase this year. Now the reason why it's not as aggressive as the 4.1 trillion as last year is because the refinances are going to be pulled out of the picture here because everyone has refinanced or in the process of refinancing right now. Although 2.7 trillion for this year and 2.5 trillion for next year are still very strong. The Mortgage Bankers Association is projecting that rates could go up in 2021, and they could go as high as 3.6 in 2022. Although they're being a little bit more conservative with the rates than Fannie Mae is, you're going to take a look at their forecast for this year, sits at 2.6 trillion for this year and 2.2 trillion for next year. And like Fannie, the MBA is also predicting that purchase volume is also going to increase. So what they're suggesting is purchases are going to be very strong next year. Refinances will go down because everyone's already refinanced. But the rates, although they could go up or go down, it doesn't matter. The purchase market is still going to be strong, and we're going to have a healthy housing market for the next 2 years. So what does that purchase market look like? So we already talked about the purchase market's likely going to have rates hovering around 3% over the next 3 years. So that's going to help. Number two, there's a demographic to keep an eye on, and that is our millennials. Millennials are going to add a substantial demand for first-time home buyers right now. They tend to buy newer homes. They tend to buy newer homes with newer technology, and they tend to expect a very digital home buying experience that we've already gotten accustomed to in 2020. They also tend to have cash, they tend to have good credit, and they also tend to be savvy buyers looking for good opportunities that are out there. So again, the millennials are a very interesting demographic to take a look at for the housing market for next year. We're also going to see the continued use of technology to simplify the home buying process. Lots of technology that was picked up during the pandemic is here to stay. Number four, we're going to see the home prices continue to rise. Now, they might not march up as quickly as they did in 2020 in some areas. The pace may be slower, but they should still go up as long as the market is strong. Again, the pace may not be as quick, but they should still go up a little bit. We're going to see new construction grow. There's low inventory right now, so new construction is going to be able to pick up the pace and build new homes for people to buy. And lastly, the rental market will have increased vacancy, and so we may see some more inventory being added for buyers versus renters. We just got to keep an eye on that rental market and what it does. So in conclusion, the market looks very promising. Now, there's a question that's on a lot of people's mind on this. It's really on everybody's mind, How is this not a repeat of 2008? I'm talking about 2008. I'm talking about the question is, will real estate crash again? And the answer to that is it depends. Before I get into this, look, Nor, Kevin, and I are really qualified to predict the market, but we can state the differences between 2008 and leave it to you to formulate your own conclusions. But 2008 were vastly different times, and there were vastly different economic factors. As mentioned, rates right now are at historic lows, and the rates for the refinances and purchases are actually helping the economy significantly right now. Home ownership and lower payments on refis are providing homeowners with more cash on hand. And there's also much, much more responsible lending practices than the risky lending practices that led to the crash in 2008. We've spent a lot of time talking about streamlining the home buying process and how easy it is, but on the back end, there's still much more lending regulations in place now than there ever was before. Number two, the housing demand is much higher now than it was in 2008. We've had an accelerated price growth, but if prices cool, it doesn't really matter because there's a healthy demand that's going to be able to sustain a housing market in the future. Number three, we're seeing residential construction jobs finally above pre-pandemic levels, making another bright spot for unemployment. We talked about how construction is going to be a big part of the next 2 years. Lastly, the rental market is changing. In 2020, we unfortunately saw our major cities have rent fall, more than double-digit percent. Vacancies that increased significantly. Freddie Mac expects some slight improvement for 2021, but lower rents could boost occupancy back into the major cities and also boosting those economies. Or landlords may sell on some of these properties, providing more inventory for the purchase market, again, boosting occupancy and boosting those economies. So again, just something to keep an eye on with the rental market. Bottom line is these shutdowns were not the cause of fiscal irresponsibility. Officials chose to shut down due to a pandemic. It had nothing really to do with the market. So it's a totally different set of circumstances between 2008 and where we are in 2020.
Yeah, as kind of a wrap up, we've experienced in new ways the critical need we have to use technology. It's been a unique year, just the insanely high volume, the ridiculously low rates. We may not see rates this low in our entire life again, right? The very high demand, the very low supply. Pete, you mentioned this much earlier on the call today, but there's still a large pool of what they're calling equity-rich homes and individuals where refinances can still be plentiful, right? This year and even into the coming years. We've heard the Fed say that they're not gonna change rates, through 2023, and so far they've stuck to it. They've even appeared to have doubled down on it. And we also know that as we adopt into the new year and look beyond, one thing's inevitable. It's this high-tech touch that we're going to have on the mortgage lending and real estate transaction experience. So those are the things to keep in mind. I wanted to share a bit of information here that we had actually received from MISMO, which is a sort of subsidiary of the Mortgage Bankers Association, but it's an organization that deals with mortgage information standards. And they'd provided some information on, I think it was on the opening address of their annual conference, that they were reviewing the tech cost of some of the large lenders, small lenders, even independent lenders over the past year. And it was interesting that the big banks, they said they reported a 17% technology cost, relative to the loan cost. The medium and small sized banks reported an 8% cost, and then the independent lenders reported a 12% technology cost to the loan cost. So interesting just that if we see the productivity and optimizing a process through the county, if we see that as any indicator, we're certain that as more and more lenders adopt technology, their costs will continue to go down. They'll become much more proficient at these digital transactions, and it will be the preferred way even for large lending institutions to carry on across their entire enterprise of doing things electronically. One of the other stats that was provided in this MISMO report was that productivity actually had increased with so many things to our disadvantage with, we may not be used to working from home, or we don't get a chance to interact and work with our colleagues and have, in-person think tanks and knock some things out. We actually had an increase in productivity. So they had reported more loans were closed per loan officer and per full-time employee than had been in prior years. So again, another positive indicator that this is a way of business, on through the future years. And then some of the additional stats, just for us to look back in 5 years from now, one of interest to me was the average number of days from loan application to loan close was reported back as 75 days, so 2.5 months. I personally think this is going to be one sort of performance indicator that we look back at, and I believe, in my opinion, that we'll be able to obtain a loan and buy a house within 30 days. I'm excited to sort of see our progress in that over the next 5 or 10 years. Nonetheless, these are some values and benefits to really consider and stay optimistic about as we begin to shift of things that our businesses will really be able to benefit from. And then here are a few additional thoughts. There's been some chatter or buzz about a couple of these topics, and thought maybe we'll hear more about them this year. But one was wire monitoring, that in 2020 that may not have happened as much as or as frequently as we experienced in the past. So there could be more risk there and importance for us to collect or protect our clients' data. Another item was consumer protection and CFPB and where that effort would really be led. And with all this adoption of technology, how could we ensure our clients and the consumers' information was safe and secure? There's been discussion about funding from federal level. There's even been, I think I had read something that said there may have been some consideration for distributing some piece of that, whether it be funding or management of it out to various states. So see what plays out with CFPB. And then one of the biggest challenges has been for large organizations that have a regional or national footprint is we can really find more ways to standardize technology. And as we get more and more comfortable with it, having a more uniform, consistent model across our organizations will really allow us to adopt the technology and see all those benefits. And then finally, the thing that's sort of an elephant in the room is what's happening with the commercial properties. We know that hotels and restaurants and shopping centers have been hit real hard during the pandemic, so it will be interesting to sort of see how long it takes for recovery to happen there, but certainly keeping our eyes on commercial real estate as well. So with that, I'm gonna kick it back to you, Pete.
Yep, sounds great. So Alta's 3 tips to cope with the evolving technology. We thought this was a great article and really relevant. I read this thing and I could probably spend a whole hour talking about the changes that we had to meet to keep up to the demand, from our team. But we had to adopt a lot of new processes that were caused by pandemic and still had to deliver these services to our customers. So Alta has these 3 recommendations. So number 1, think long term. Everyone has done a great job implementing video conferencing and CRMs and other tools to help everyone stay organized and stay in business during the pandemic. And what you want to do is think about how you continue to make these processes part of your routine going forward. You'll avoid future issues later on down the road when we reopen if you hang on to some of these tools. So there's likely long-term value in a lot of the tools that we're taking advantage of today while working remote. Number 2, perform a tech audit. While your team is using more and more systems, you may want to audit these applications and find out if some of these new tools are overlapping with some old ones and replace some of the old ones and cut the cord where you see it's needed. And not just a necessary an inventory audit, but you really want to dig in and ask your team what they like and what they don't like and see if they're actually using some of the new tools and see if they're still using some of the old ones and make a sound and informed decision on what's going to make everybody operate better going forward later on down the road. Lastly, Alta recommends to consider remote production options. And what they mean here is considering leaving some items remote or finding a partner that can mimic your internal operations remotely. So when your team comes back into the office, when they come back to work, they can focus on the things that are the most important while your remote production team can do some of the busy work on your behalf outside of the office. Again, some really neat tidbits from Alta I thought it was worth sharing, particularly where we talk about remote production options. Because when we talk about remote production options, this is something where CSC is here to help. We help a lot of our clients with real estate recording. And what is e-recording in general? Well, e-recording submitters are able to process and transmit electronic real estate documents over our secure web network directly to county recording offices. So I believe if you're on this call, at some point, you're likely filing your documents this way. And if you're not now, that's fine, although we'd love to have you do it with us. The trend is heading that way, as many of your competitors and peers are currently submitting documents electronically right now, and they do it for a lot of reasons. The benefits of e-recording are many, but I'm going to kind of breeze over them now. There's a significant cost savings. It reduces and eliminates labor, postage, courier, and materials costs. There's a significant time savings. We submit the documents in seconds to the county, so this is going to shorten the gap to recording. It's going to protect your lien status, and you're going to be able to meet your filing deadlines much quicker. It's 100% secure. You never lose control of your documents. This will eliminate any lost or damaged or altered documents in transit. You're going to have fewer payment errors. CSC pays the fees based off the recording receipt on an accurate, secure, and timely payment. You're going to have lower rejection rates. Lower than paper submissions, it's about 1% for L3 documents, which is going to save you a ton of time. And you also have an efficient rejection management. So in the event of a rejection, you're going to be able to receive that document, correct it, and return it within hours instead of days. So it's not going to hold up any closings that you have out there. And lastly, we have world-class customer service. We have the highest NPS scores in the industry. Now, in addition to e-recording, there were some rapid changes this year, and e-recording wasn't the only way we were able to help our customers. We offer a number of additional real estate services that are integrated with our e-recording platform that we think would help this audience. So for those of you that are e-recording with us, don't forget that we offer so much more. So this is a list of some of our newer, they're not brand new services, they're some of our newer service solutions that we offer, and many of our customers are taking advantage of today. So property search services, it's probably our most popular product right now outside of real estate e-recording. Our search services are integrated with our e-recording platform, so it allows you to obtain property information such as owner name, tax summaries, APN, PIN, long and full legal descriptions, full legal vesting information such as legal names, market sale details such as the sale date and the sale price. You can pull images. So we have a document retrieval service that allows you to obtain images, including the last transfer document like the deed, the last finance document like the mortgage. And bottom line is if the document is there electronically, you'll have the ability to go ahead and get it in seconds. We offer commercial document templates. We have a signer manager tool. We offer e-trustee services. We offer deed of trust lookup services specifically to Colorado. We have custom email notifications, and we have a borrower notification letter services. If you want more information about some of these ancillary services that we offer, feel free to reach back out to us. If you want to take advantage of these, we'd love to talk to you and see if this is something that can help you out.